8:30 a.m. in London when we're doing this market update. If you're new to this, my name is Alejandro Zambrano, and I've been trading since 2006 and profitable since 2014. So if you are struggling with your trading, please stay tuned and please make sure you subscribe to our channel and like the video because I'm going to share with you guys the levels which I think are important for traders, and hopefully this can help you with your own trading. Okay, let's begin. And you're looking right now at the Euro USD, but let's just provide you guys with a brief overview of what's going on in the market. And you can see here in these markets, or in this little list here, that you have the Aussie dollar being down with about 0.5%, which is really the front runner today. So what's been happening here overnight is that the head of the Central Bank of Australia let us know that the central bank is considering to potentially cut rates in June. In the past, Westpac, which is a large bank in the region in Australia and New Zealand, they're very good with their forecasts for what the RBA is going to do. They've been projecting a rate cut in August, but it now looks like the RBA itself sort of wants to let people know to get ready for a cut in June. And in the last meeting they had, the RBA, they did not cut actually. It was a 50-50 chance of cutting according to the market, but they did not cut. That cost the Aussie dollar to gain. But now they're hinting about, rate cuts. And every time a country is looking to lower interest rates, that tends to send their currency lower. And any country that tends to increase interest rates, that tends to send their currency higher. So that's why we're having that reaction. And New Zealand dollar is also lower on the back of that, because these two currencies tend to be, or these two countries tend to be close connected. In fact, the New Zealand Central Bank cut rates in the last meeting. I think it was just 2 weeks ago. So both of these have been going lower, and I think that's now influencing positioning in GBP USD and in the Euro USD. But obviously, in regards to the GBP USD, it's all about Brexit. I think people are now getting worried that the likes of Boris Johnson might become the new PM, and that they're gonna push through with the no deal Brexit. So that is what people are a bit worried about, and just the turmoil around Brexit in general. I think that's really what's worrying people, and that is obviously influencing the GBP. And it looks like now, at least, the Euro USD is also sort of catching up with the developments in the other countries. As for risk assets, you can see here S&P, Nasdaq, Russell 2000, Dow Jones, and also here the German DAX. They're all higher, and it's just a bit of a little sort of corrective move to what we've seen yesterday. There's nothing really on the radar that should suggest that we're gonna find a low in these markets anytime soon. So still think we're gonna go lower, and because of that higher risk appetite, you see here that the dollar yen is slightly upwards. That's why you can see here that the dollar Swiss C is also up a bit. So those are sort of the themes that are ongoing, and then also just in general, we already talked about the dollar, right? And the dollar in general is doing quite good against many different countries, many different of its peers. So that's sort of a general overview. Now let's take a look at the details. So here's your euro versus the USD. And you might remember I've been saying people are probably going to sell up here. And they sure did. I have now reduced that trend defining level. And the trend defining level is the level where the trend, below that level, the trend is bearish. So I only want to be selling. And above that level, if price happens to be above that level, I only want to be buying. So we said here people are probably going to sell, and they're probably going to try to push price lower to maybe 111.29 and these lows here. And this is exactly what's happening, right? And obviously heavily influenced to what's going on in the other markets. And the Aussie dollar, which is something I covered extensively on this YouTube channel, is doing really great and obviously going down. And that's sort of been what I wanted to trade. Because in regards to the euro versus the USD, the euro is acting a bit like a funding currency. So when you see stock markets going lower, which I think may happen, then the euro has been supported. So here has never been really something really good to trade, especially because of the overall sort of choppy markets. But we're being right in the prediction here in the outlook, and I think we're going down a bit more maybe. maybe to 11.30 today, 11.25, something like that. But I think here people gonna probably start to book profits. We can of course stick out the low, so I wouldn't be buying. There's two options I think. Just booking profits on everything, alternatively booking on half of the position, and then sort of try to see if we have a break to this low and lower the trend defining level to try to capture as much as possible, because the markets have changed a bit. They have. Like if you look at the Aussie dollar is trending strongly lower, New Zealand dollar is trending strongly lower, and GBP USD is not taking any prisoners. Like all these people that have been long, that have been able to buy on dips and then been able to claw back losses, they're now caught in this downward spiral in the GBP USD, and I'm sure a few people have been getting margin calls over the last few days, and if this continues, you'll have even more by the end of the week. And that's a change in the character of the markets. We're going away from choppy markets, and maybe now the euro is also going to be trending, and if it does, then we can potentially go lower all the way down to 109.18. And something I did not cover, and let's do it now. This is a currency a lot of people don't look at too often, but it's the Chinese yuan. Now, with tariffs and all of that introduced, the Chinese yuan has softened with about 3.13% or 3.7%. Now, sorry, 3.17%. Now, what we need to remember, so these guys are exporting, the Chinese are exporting goods, right? Now, if they increase tariffs with 25%, but their currency goes down with 35%, suddenly, the consumer that is buying in the US and the wholesaler is buying from China, for them, it's the same price as before, more or less, right? Because the currency has now declined, so the goods are now 25% cheaper. So as part of that, part of a tool that the Chinese government can use is to weaken their currency. So here, from a purely technical perspective, it looks like a cup and handle, I think they call it. And if we have a break to something like 698, this market could go substantially higher. Now, it's a controlled market, so it can't just go up and down massively, but it wouldn't be unsurprising if it goes a little bit higher. Now, why is this important? Well, on a PPP value, the Chinese economy is the world's biggest economy. It's not the American economy, but it's the Chinese one, which is the world's biggest economy. And it just makes perfect sense. They will continue to grow as well, because just the sheer amount of people in that country, right? I think every fifth person in the world, or every sixth person in the world, is Chinese. So the fifth, like a fifth of all value in the world is gonna be owned by Chinese at one point. And it's just mathematics, and pure has to do with population. So the Chinese economy, again, that was actually a bit of a side story, but I think the Chinese economy will gain. And if we trade upwards here, it's not a secret what's could happen with the Euro USD. So you want to keep an eye on that. And if we break that level, which is more likely now than before because of the current situation, then Euro dollar could potentially trade much lower. So keep an eye on that. And on a break to 111.10, I think we can go down maybe to 109.18. So there is a case to keep half of the position and sort of maybe see what happens with the rest. So that's something you can consider for Euro USD. Now this is the GBP versus the USD, and I traded this one before, and it's always been a bit difficult market. I struggled, I think, the first 2-3 years trying to make sense of this market, but it's now stuck in a very, very strong downtrend. I've seen this before. It's not taking any prisoners. Like, it doesn't pull back hardly. Every morning it just triggers lower and triggers a bunch of stop loss orders, and this is going to continue until it doesn't. I know that's not of any comfort. I mean, we'll be having 1, 2, 3, 4, 5, 6, 7 days of just bearish price action, with the exception of yesterday. So I think this can continue to trade lower. Now, if you know how to scalp and you know what you're doing, then yeah, maybe you want to scalp the downside. We have a massive head and shoulders, head, left and right shoulder, and that upward trending or that trend line, the break here suggests we can go all the way down to 123.16. I think that's a little bit too exaggerated. I think maybe 124.72 maybe, or 125.88. I think these could be some interesting targets. So if you're scalping, you know what you're doing, then you may potentially take advantage of this. If you're not a big scalper, and I'm not, then you need that little pullback. You need to be careful because when this starts to go up, I think it's going to go aggressively higher. But for now, obviously, Aussie dollars weighing things down, Euro dollars weighing everything down. Everything is sort of influencing each other and sort of causing things to slide. Now, this is your dollar versus the Japanese yen, and there's not a lot of activity here, and I don't think it makes too much sense to work with this one, but you know, the trend is short-term bullish about 109.46, and you might actually see the market trade maybe to 110.50, 111, and then we'll see what happens. This market is clearly trading sideways here, so there's not too much for us to do here at all. Gold prices are going down slightly, not a lot, down by $2 today. And I think what we're dealing with here is just the influence of all the other markets going lower and sort of general appetite for dollars. And this market is now going slightly lower. But as I've been saying over the last few days, it's probably going to continue to trade sideways between 1266 and 1303. And until we either go bullish or bearish, there's no point of doing anything here. Crude oil prices supported on the Iran-US sort of geopolitical tensions. So a lot of noise from both countries. Unlikely to be any major action where the countries confront with each other head to head. Of course, there's a bunch of proxy wars in that region. So there's conflict, but not. I don't think it's gonna be any direct conflict between both. It doesn't make any sense for Iran to even try with the U.S., especially now when Donald Trump is there. So I think they're not going to do nothing, and I think that's just going to calm down. Now, if stock markets go lower, then you'll have a negative impact here, I think. But for now, we have this little rectangle pattern that was created over May. We had a bullish breakout, and now the market's moving away. We touched that buy zone 1, 2, 3 times. Maybe we hit that 4th time today. I have reduced the trend of funding level, so it's now here at 62.18. It was slightly lower, and then when we take out that high, if we take out that high, we can probably reduce the stop loss to this low here, and then we pretty much will be at a break even. Not break even, but almost. Okay, what's going on here? Well, this is the S&P 500, and this is a 6-hour chart. And a few days ago, when trading down here, actually, trading down here, I said we're probably gonna go up, and if we go up, I think people are gonna sell. And my trend of funding level is pretty much at 28.89. So below that level, we're dealing with a downtrend. And if you look at this, you can see this like a head and shoulders with a head, left, right shoulder. But if you look at something like the Nasdaq 100, I mean, it's clear as day and night that this is a head and shoulders with a left, right shoulder and a head, right? So it looks like we can trade lower, and this suggests a 7% decline. If we take out the low, that is. I've been bearish here for a few days already, but not on the back of the head and shoulders pattern. But take out 72.56, and I think the market could trade much lower, maybe down to well, look at that, 6,666. It's actually 6,671. Actually is, no, it's 6,662. Anyway, if we just add things up, things are not looking that great in the world, given how trade wars are developing. And you have this massive head and shoulders here. You have a decent head and shoulders in the S&P 500. It might be that nothing happens, and in the S&P just trades sideways between 2,785 and this high here. But the macroeconomic story is suggesting lower prices. You have patterns in here. You have patterns in the Nasdaq. You have patterns in the CAC 40, and even in the FTSE 100 and Chinese stock market like the China A50. So the only sort of markets that are doing really good, or at least very strongly I've seen lately, is the Australian economy, just because they had a new government, the people like that, And then you have the Indian stock market that had a massive gain over the last few days as they had an election there as well, and Moody got re-elected, right? So those are outliers, but many of the other global markets, they're creating these massive head and shoulders, and we might have a break to the downside, and that's really what I'm monitoring. In fact, like, it's soon June, and June, July, August, September, October, it just tends to be rubbish month for trading stocks, especially August, September, October. And then the best time to be long is really from, say, either after a massive low in October, alternatively sort of November, December, January, February, March, and then after that sort of it's pretty much over. German DAX, what's going on here? So German DAX, so there's obviously a good story, or like a good, there's always, unfortunately, there's always like two sides to a story. Not unfortunately, but there just is. And there is a setup here, which is in the German DAX. So if you believe that Donald Trump and the Chinese government are gonna agree to some sort of a deal, and even if they don't agree to some sort of a deal, think the world's gonna be okay, then this is where you want to be focusing on. You have support, short-term bullish above 11,842. We talked about buying here at pretty much around the third fib, around 12,036, and the market has so far bounced. And it could be that this is just going to head upwards, and we'll have further gains because we have this head and shoulders here, this one here, which we mentioned, and this head and shoulders here is still in play. And also the ECB, as you know, they're going to introduce TLTROs, and these TLTROs should help German banks and European banks. That may help some of the companies in the DAX 30. And I think that's pretty much it. We cover most of the markets. Wow, there's a lot of people here. I'm happy to see that. So we have Sean, Nikos, Andrew, Marvin, and Zach. Guys, thanks so much for joining me. I'm very happy to see all of you guys here. Don't forget to smash that like button. It's down here. It's really important. If you like the show, smash that like button. We have in general about 70 to 80 people watching this, and it's all just because of you guys liking this video and helping spreading the word about it. So like it as well. Don't forget to share it. Just that little button here. You can share it to your Facebook, to LinkedIn, and Twitter, or you can just share that link. It's really important. If you like it, support it. So hit that like button, and let's see if we can answer a few questions. So Marvin says, good call on the Aussie dollar yesterday. Thank you. Yes, so Aussie dollar moving down lower, and the way this is looking right now, and this is a daily chart, is so close to the low. I think when the Americans join, they're gonna probably start to sell a bit more. They're probably gonna try to trigger the stop losses below here. We'll go probably a little bit lower today, maybe 68.30, 68. But then eventually I think we can go lower. It's been a difficult period to trade Forex since pretty much October last year, when all these markets trading sideways. But now we're starting to work with some trade trends, and it's starting to look good. I mean, this is going lower. NZD/USD, I shared a setup here with my members already in April. This is about to reach target, so things are going good. As well, I forgot to mention, do you see that link up here? We're trying out something new. So you can send a message to this number here. And if it doesn't work, I'll just give you the number. And what I'm going to do is we're setting up a WhatsApp channel. So I'm probably going to send you 1 to 2 messages a day. So this is an alternative to Twitter. So if you can't be bothered with Twitter, you don't always log in, you maybe miss my my tweets in your feed because there's so much stuff going on. Then what I'll do here is I'm gonna send this video so you can just load it in your YouTube and you can see it directly on your mobiles. It's free to join, And if you don't want to be in the list afterwards, you say, wow, this is too much, then just send me a message to remove you from the list. It's very straightforward. You got that phone number there, and you also have this link up here which you can click on, and that should also work as well. Okay, Zach is asking about the China A50. Okay, let's load the China A50. Okay, so this is a China A50. So the China A50 is still creating what looks to me like a head and shoulders. A few weeks ago when the market declined to these lows, I said, look, it might be about to create that right shoulder, and it's still in the process of creating that right shoulder. The last time it spent about 35 days creating that right shoulder. We have so far spent 14 days. For perfect symmetrical, then on June 10th, by that time, maybe that should be completed. It could be already completed now, I think. 10 days is actually relatively sufficient. And what you're looking for here, if you want to trade this market, is that if we trade below this low, which is 12,302, at that point, it will probably turn bearish. The market needs to slide with another 2.78% to reach that level. And then, we can probably see the price decline to something like 10,317. Now, the way I operate and the way I trade my own account is that I know that realistically we're not going to hit all the way down. That just happens like 18% of the time. But if it does, if we just imagine that the market trades a little bit lower tomorrow and we need to have a stop at 13,536.7, say that the market breaks down maybe on Friday or Thursday. So we need to have 267 point stop loss versus the potential target. You're looking at a 7.5 times risk reward ratio. However, what if we just go halfway like that? Then we're still looking at 4 times the money, or 4 times the risk. So that's sort of my thinking. And what I try to do, of course, is that when it breaks, goes a little bit lower, I try to reduce my stop loss. And most of the time I can reduce my stop loss. So the effective risk reward ratio is slightly better, not slightly better than the big massive initial one, but it's slightly better than the 4 time I just mentioned here. Because at the end of the day, when it comes down to you trading, what you want to do is you want to look at your winning trades and your risk reward ratio. Average win to average loss. They're different combinations, but if you're using a trend following system like the one I'm using here, on average, you're going to be right about 35% of the time. And you're going to have a risk reward ratio of about 2 times, 2.5. Sometimes I've been up to 3 on average. But it's quite interesting actually. A trading system that is right 40% of the time, but has a max average profit to loss of 2 times, is more profitable than one that is just right 35% of the time. And you can do different combinations as well. So it doesn't always have to be that you have to have that very high risk reward ratio, because there's an inverse correlation between high risk reward ratio and profitability rate. So the sweet spot is somewhere there in the middle. What's also interesting as well is that the sweet spot depends on you. A lot of people, they can't deal with just being right 35% of the time. So maybe being right 40% of the time, but still maintaining a decent risk reward ratio is good. So different combinations, and in fact, you know what we have done now, guys? I actually managed to record, I think, about 4 hours of content. I think 3.5 I need to cut. So this weekend I recorded about 3.5 hours of content for ATFX. And what we're doing here is that anybody that opens up an account with ATFX is going to have access to this course. I'm going to do some editing before end of this week, and then we're probably going to have the video up and running maybe early June. I think end of last week of June. Sorry, end of the first week of June. And there we talk about risk reward ratios and trading in general. And it's a premium course only available to clients of ATFX. And there are numerous reasons to trade with ATFX. They have very, very tight spreads, very low rollover costs, and then you get access to the premium course. You get also access to coaching if you deposit more than $5,000. And if you happen to be in Europe, then we have our FCA entity. Even if you are outside of Europe, you can open via our FCA entity. But if things like leverage is important for you and you're non-European, then we do have international branches as well that gives you the sort of leverage that we used to have in Europe before the new regulations. But that only is for non-Europeans. Okay, so we got a question about the pound dollar. Yes, so for the pound dollar, yeah, Sian asks, so for the pound dollar, the market is going lower, right? So it's just about selling. And if you have a scalping system, then yes, you can work with it. And I mean, it is possible to identify short-term patterns in the smaller charts as well. Like this is a small descending triangle in the GBP USD. This is just a 44 pip decline, and we have not reached a target yet. So maybe if we have a test of the lows at 2710, so 2710, but as long as you trade below 2732, it might go down. The problem though is that these short-term patterns, they don't usually roll over and they're not really reliable in the short term. So I don't bother to trade them anymore. But if you have a system where you can trade short term, then I would look to sell this because I think this market can go lower. If you don't have any sort of system, then wait for that pullback or just work with any other markets. There are different markets out there, different combinations and different things I have shared with you guys. And I just shared like the tip of the iceberg here. So there's much more around there. And if you want to know more, you have that number there where you can just reach out to me and we can talk. So Sian says, my broker keeps on buying pound dollar for me. Okay, yeah, so obviously you're dealing, a broker should never really be buying and trading for you. For example, in European brokers, they're not allowed to trade on behalf of their clients. There's just some specific brokers with specific money management licenses that are allowed to do that. And usually what happens is that it's within a mandate where they are allowed to trade your money. And, you know, it's difficult, like, if it's a real professional, then I guess he's buying because he has some sort of a strategy. But if you give money to a kid, someone that doesn't really know, with no trading experience, that didn't show you too much, which is just a fast talker, then obviously you're a bit of a trouble there. So yeah, I don't know what to say there. If you don't have confidence in your money manager and broker, then obviously maybe you can talk with them and do something about it. But you need to be careful, and you don't have to be careful actually. You just need to do your due diligence. To give you a little bit of a tip, if you ever consider going down the route of having someone manage your money, always make sure that at least there's 2 years of track record. That means that they can show you on paper, look, this is what I've been trading over the last 2 years. There are different ways of verifying. Some people use something like MyFXBook, which is sort of a free software. As long as the broker they're using is not like a weird looking broker, like a broker you never heard of, but if it's one of the bigger ones, then yes, that could be something. But you need to get a direct link, so no screenshots, no nothing. It needs to be the direct link. So 2 years of track record. So you want to see how they trade over a long period of time. You need to ask them, how do you do? Do you buy more when you're losing? Some strategies do that and they do that successfully, but most of them don't do it successfully. Most of them just blow up. So you want to ask how you manage your stops, what's your risk reward ratio. You want to look at all of that before making a decision. Alternatively, well, there's actually no alternative. You always need to do your homework when it comes down to money. Okay, we're gonna wrap things up. Guys, thanks so much for joining me. I can already see a few guys here signing up on that WhatsApp feed. Add my number as a contact and I will add it to the list. And I will be sending you this video every day, and maybe 1 or 2 other articles at most, so you can stay on top and know what I'm up to. Guys, thanks so much for watching, and I'll see you guys tomorrow, same time here at ATFX YouTube channel. Thank you.